This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz, 313.23, show number 473. Well, Nick, the Fed has acted, and so much for the yield curve.
Well, we still have an inverted yield curve, though. That's the one thing that everybody has to be aware of. There's still a big inverted yield curve, but we did have yields tumble today. I've been telling everybody always to watch that 2-year Treasury note yield. Today, believe it or not, it was down 62 basis points. Right now, it's at 3.96%. You have the 10-year at 3.515%. So believe it or not, we still have an inverted yield curve. But yields did come down quite a bit, and the spread did tighten between 2s and 10s. The irony here, though, is, if you watch the talking heads on TV over the last couple of months, especially since we had the January rally, all you kept hearing was, I don't think the yield curve matters this time. And if I am a student of history, I always quote the late, great John Templeton, and he said, the 4 most expensive words in the English language are, this time it's different. And this time it's not different, right? We're being shown again, with Silicon Valley going under, Signature Bank going under, Silvergate going under. 3 banks in a week span have gone under, and this is all because of the inverted yield curve. Maybe not so much the Silvergate, but the other 2 definitely because of the inverted yield curve. Now, what happens to the rest of the banks out there? Today, I have to tell you, Kerry, Citigroup just had an awful day, down 7.5%. I mean, it could not even bounce, and it finished at the lows of the day. And that has me concerned that there's a bigger problem looming out here.
Yeah, well, what people think, if I go to a local bank, a neighborhood community bank, my money will be safe. That is incorrect, because all of the smaller banks have to use the big banks for their relationship with the Fed, for buying T-bills, everything else. It's called correspondent banks. So your money is as safe as the weakest bank in the system.
Yep, and that's a very good point. And, again, this time around, the depositors were bailed out. The shareholders and the bondholders were not. But the depositors were bailed out. Now, many people are going to say, hey, if my bank goes under, am I going to be bailed out if I have over $250K in the bank? And that's where we sit right now, and that's a big if. And I'm not sure. I haven't been able to do the math yet on what it would be like to bail out every single depositor in the country.
Yeah, well, they can't do it, is the answer. They didn't handle this thing the way they used to handle them, where they'd find the white knight to take over the bank, basically wipe out the shareholders and the creditors. They've out of practice. We haven't had many bank busts, none in the past 2 years. Last time we went 2 years with 0 banks going under was, I think, 2005 and 6. And you remember what happened then.
That's right. And a lot of people, this isn't the same scenario as 2008, but it has a lot of the markings on there. And I just think that looking at what's going on, the Fed is stuck between a rock and a hard place. Janet Yellen might have lost all credibility too, if she had any. But, she's over there in Ukraine, and here we have a banking crisis going on, and she's promising more money to them. So I find that a little bit disheartening. But when you look over here and you see what's going on in a lot of these other banks out here that have similar problems, we always talk, Kerry, you and I, about we're from New York, so we've seen the cockroaches. If there's one, there's a million. And today, the banks, or even Friday, that was being told to us.
Yeah, and Nick, this kind of, I think the housing stocks were really indicating that the sudden change of interest rate policy was going to happen. I mean, they've been really strong when you look at their charts, right?
they've been somewhat resilient, as of late. And, did they know something? I own puts, full disclosure, on KB Homes, but the housing stocks topped out also on February 2nd, at least a short-term high. And now they look like they're making a wedge pattern to go lower. But remember, Kerry, regardless of what yields do, if these banks start to even get absorbed, remember SIVB, which is Silicon Valley Bank, they couldn't even get bought out. Nobody even wanted them, and nobody wanted Signature Bank either, unlike a Bear Stearns scenario where JP Morgan took them over, or a Washington Mutual, or even a Merrill Lynch to that degree. So again, this is going to be much, much tougher to get a loan. And honestly, the Fed, what are they going to do? Are they going to actually cut rates going forward in next week in that meeting, or are they going to leave rates alone, or are they going to have to raise by a quarter point? So, nobody really knows. That's the wild card there. And do they end their quantitative tightening? Right now, they're doing a quantitative tightening to the tune of $95 billion a month. So there's a lot of unknowns out here. My take on the markets: when there's unknowns, there's selling pressure.
Unknowns equals selling pressure, right?
That's right.
All right. So gold and silver and crypto really took off today.
Yeah, gold took off. I mean, gold was a monster, but gold actually, if you look at the chart, that actually had a great day on Thursday, a great day on Friday, and an even more explosive day today. So really just a good move on gold, but this is fear. And people are running to sound money, and that's what gold is. And that's what silver is. Silver is having one of its better days that we've seen in quite a while, up 6%. Yeah. So, I mean, you look at silver futures, 6.7%, right? So just a tremendous run. And, we'll see how long it can last. I haven't had a good chance to work on my silver upside objectives. I'll do that tonight. I have a lot of work that I'm going to be doing tonight. So anybody that wants more information, come on over to my Bullseye report. But I'll be talking about all of the different levels in so many different areas tonight.
All right. Well, we wanted to get this in, even though both of us were really super busy today. Make sure you go over to Nick's site, inthemoneystocks.com. See how he's been beating the averages for decades. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. And your comments are welcome at KL at kerrylutz.com. And while you're at it, just write a comment down on the YouTube channel. We'd love to hear what you have to say. Nick, we'll talk to you on Wednesday.
Sounds good, Kerry. Thank you.